Yes. What's going on, family? What's going on, guys? Welcome to tonight's session with the Prophet Society Familia. Super excited to be here with every single one of you guys today. As it's the start of a new trading week, all right? Happy new trading week to every single one of you guys. I hope that every single one of y'all does end up having a phenomenal week. But let's actually go ahead and make sure that we are prepared for this week by taking a look at the fundamentals, trying to figure out sentiment, and then also go ahead and breaking down the technicals, guys, to see what a bunch of our favorite ideas or setups or what our favorite pairs are actually going to end up doing, right? What type of setups we could potentially look for going into today. Now, we do have the entire team with us tonight, so you are going to hear from each of us, get our different perspectives on these markets. And hopefully you guys are able to go ahead and gain some value at the end of the day, family, and also have some clarity as to what to look for going into this week. Right, so I'm super excited to be here. In the meantime, guys, go ahead and just drop your locations in the chat. Let me know where you guys are tuning in from, because we are, again, live with another trading week. All right, go ahead and drop those locations. I'd love to see how diverse we really are in this community. And let's see who we got here so far, right? So I see we got Trinidad and Tobago in the building. We got Charleston in the house. ATL, what's up? We got West Virginia, what's up? Alabama, ATL, Alabama, Vermont, Rhode Island, San Diego. We got Wisconsin in the building. Columbus, Ohio, Riverside, California, La California, Baltimore, Maryland, stand up. We got St. Lucia in the building. Toronto, LA as well. Welcome to every single one of you guys, family, as you guys are coming in as well. The only favor that we ask of you guys is to go ahead and just smash that like button. It definitely just helps our video, go ahead and go out to a more larger audience, right? So for those of you guys that do end up smashing the like button, it's much appreciated, and we really do this for you guys, right? You support us, we're going to definitely support you guys with massive value and massive gems, guys, in these sessions. All right, so big shout out to you guys. I see we got Suriname in the building. We got Homestead, Florida as well. So let's go ahead and really get into this, guys, and see what type of news we have for this week, because we actually have a very interesting week this week, guys, right? It's going to be an extremely volatile week because we do have a lot of news on the radar for this week, right? So let's go ahead and go into this really quickly and see the main ones that we have to be aware of. So starting today, guys, we actually did just have retail sales get released for the Australian dollar literally about 30 minutes ago. Let me just see if there was any type of reaction. No type of crazy reaction from that. But again, retail sales right now, guys, is definitely one of those things that you could say that you might, not us genuinely speaking, but you could say that some people are actually keeping an eye on that number. Because again, we really want to see retail sales continue to decline, right? We want to see that number continue to decrease if the goal is to fight inflation, right? So that's just a very interesting number we're going to be keeping an eye on, guys, throughout the rest of the year, just to see if the demand is starting to decrease for, goods and services, right? So we'll keep our eyes on that for sure. But going into Monday, guys, we do have CPI for the euro. Right now, that it's expected to actually increase, right? And you guys know what's been, again, the biggest thing that these central banks have been fighting has been inflation, right? Trying to get inflation under control. So we'll see what this actually ends up coming out as. I will be surprised if it doesn't come out at 10% or higher. They're absolutely getting destroyed over there with inflation's terms. Literally the price of goods, guys, is now increasing by 10+% year over year. That is crazy, right? That is what's going to make a lot of people that are already paycheck to paycheck truly start to experience a lot of pain, right? Because of, how crazy inflation is going, right? So that's something that, again, guys, we could take advantage of, right? If we know inflation is, increasing, what should we expect the ECB to do, right? The Euro Central Bank. How should we interpret, or how should we look at that central bank? Right? I want you guys to answer that in the chat, family. Right? Answer that in the chat, right? If we do come out higher and we see that inflation is still very much high, what can we expect the ECB to actually do? Are we going to expect them to be more aggressive? Are they going to be, want to tighten up even more? Or are they going to actually start easing? Right? They're probably going to be more aggressive. Right? They're probably going to be more aggressive, right? And how can they be more aggressive? By continuously raising rates, but not just raising rates. They might actually even come out and do something crazy in their next reading. right? Where they raise rates a full, 1% or 100 basis points. Because clearly, again, inflation is still not even in check over there, right? It's still creating higher highs. So they're going to have to be a lot more aggressive to try to get that under control for sure, right? So that's going to be very interesting number, guys, that we have to see for tomorrow. It really is going to shake up the euro market. So if you are trading any euro pairs, you definitely got to be aware of that for sure. We also do have, guys, the Australian dollar. We have the interest rate decision for the Aussie from the RBA. This is also a very interesting reading, because they're only expected to actually raise rates about 0.25%, which is kind of interesting, right? Because their last reading, they actually raised it 50 basis points, right? So now they're going from raising it 50 basis points and they're lowering it, right, to 25 basis points. Now, this is very important, guys, for us to be aware of. Because again, the central banks and what they're doing with monetary policy, right, especially what they're doing with interest rates, it's affecting, the supply of money, right? It really is. When interest rates are higher, right, typically the demand for, let's just say, the Australian dollar is going to be higher, right? So we have to understand how that really is going to work. But understand this, guys, right? They're going from raising it 50 basis points to now lowering it by how much they're raising it to 25 basis points. Are they doing this because they feel like inflation is finally under control? Possibly, right? But just the fact that they are starting to lower it could start to bring some optimism over there in those markets. Because again, it's all about trying to figure out what sentiment is. Now, again, keep in mind, they are still technically raising rates, right? So the central bank is still technically going to be hawkish, but by how hawkish is what's going to be the biggest difference, right? So again, if they do this where they only raise it 25 basis points, they're pretty much aligning themselves with what the Bank of Canada did, right? The Bank of Canada, again, they went from raising it 75 basis points the last reading to last week, them actually decreasing by how much they're going to raise rates, right? They ended up only raising rates 50 basis points instead of the 75 that they did. So it seems like there could be some type of a pattern, guys, where these central banks now are starting to decrease by how much they're actually raising rates. And that could definitely start to cause that shift in the markets and shift in sentiment that us as traders should definitely be aware of, right? So that's just something that I think is very interesting that I'm starting to notice, guys, with central banks. It could be something. There could be a pattern that we're starting to see here, that could start to lead through a lot of central banks, or it might not be nothing, right? But again, our job as traders is to, take all this data, guys, and really come up with the best solution. Right now, again, I do have the guys on the call today, right? So I'm definitely going to be very interested to see what their thoughts and opinions are regarding that topic in terms of, now seeing these central banks pretty much only, lowering by how much they're going to raise it, right? What the thoughts and opinions are on that, but we'll definitely get into that in a second, right? But that's something to be aware of, guys. On Monday, the RBA interest rate decision. On Tuesday, we have some PMI information, some PMI data. We do have the JOLTS jobs openings report. Then we do have just some press conferences for the New Zealand dollar. But Wednesday, guys, is probably going to be the biggest and most important day, at least for, in my opinion, for us. Just because, again, we are going to experience, wait, let me see. Yeah, on Wednesday, we're going to experience FOMC, right? We have the FOMC statement, and we also have the federal interest rate decision, right? Again, this is where we're going to see, guys, what the Fed is planning on doing, when it comes to interest rates, right? Right now, they're predicting or projected to actually raise rates around 75 basis points, right? Going from 3.25% to around 4%. Okay, we already know that the Fed is hawkish. They said that they're going to remain hawkish until they finally get inflation under control, right? So as long as the Fed is hawkish, which again, I have no reason to believe they're not going to raise it 75 basis points, right? But now, as long as we understand that they're going to keep on raising it, we use that information, guys, to really position ourselves in the markets for sure, right? But that's something that, again, on Wednesday, we have to be paying attention to, right? That's probably one of the an event that we will actually be trading live with you guys here on YouTube as well, just because it is such a big event, just so that we can really analyze the data together, right? So definitely look forward to that on Wednesday, guys, because we will be trading that live with you guys as well. Now, going into Thursday, we do have some more interest rate decisions for the Bank of England. That's going to affect the pound as a whole. So keep your eyes on that. We have some initial jobless claims. And then going into Friday, we have the unemployment rate, non-farm payrolls, the employment change for the U.S. and the CAD, right? So again, it is going to be a very, very, very crazy week this week, family. So make sure to have your seatbelts on. Make sure to be practicing proper risk management and just understand what to look for. All right. It's not the week to try to force anything. Wait for the best opportunities and then just, act as soon as it shows up, right? But like I said, guys, I want to actually go ahead and pass it on to the guys, right? And just get their thoughts and opinions on the biggest news events of this week, right? Because this is really going to be my main focus, right? So really dissect all this information and try to figure out a blueprint for us, right? So that we can figure out exactly what's going to happen. But like I said, I'm actually interested to see what Skaggs, Ray, or Kyle, what they have to say in terms of the news for the week, in terms of the Fed, and give their thoughts and opinions, right? So what's going on, fellas? How you guys feeling?
Better than amazing, man. How you?
We are blessed, blessed, blessed. All right, so we have a lot of news on the radar for this week. What are your guys' thoughts and opinions on the interest rate decision for the Fed, interest rate decision for the RBA, for the Australian dollar, interest rate decision for the pound, right? We have a lot of big data this week. How you guys feeling about that?
Honestly, I feel like this would be a great week in the markets. I feel like dollar is doing a short-term retracement, and news is really just the excuse to move price there. So, last week we saw a sharp spike up and then a spike down, and I feel like we're just in that pullback stage that the news could really provide us some great entries this week. Not really sure when, but I'm curious to see when. So we shall see.
Like you said, I do believe that the dollar is also in a retracement stage right here. I am looking for specific price to take advantage of the DXY. I'd say around 113. That would be interesting for me in terms of the DXY continuing to go bearish for a short period of time. And that's just considering that the chances that we don't actually go down and hit, about 109 or the 108 area first. But if we do actually push up, I'll be looking for, short-term weakness, long-term bullishness. And that's why I'm actually in some GU shorts. I just took a shot on that. Again, just going against the trend temporarily. And, I feel like we can definitely get that. And then once the DXY does continue bearish, that's when I'll be actually looking to take some profits on that position. So I'm just playing what I see. I know you're big on the fundamental side of things and the sentiment side of things. And, I'm just somebody where I believe that, and I remember Skaggs talking about the shock numbers and, the reactions and the, volatility that we get around these news events. But I'm very big on just playing what I see. And, so I take heavy consideration into the data. But, I do just look at these price points being an area that will be manipulated when the data actually releases. So, for me personally, looking at a little bit of bearishness this week on the DXY, bullishness for probably the next day or so, right? Probably the next day and day and a half. And then looking for some bearishness. And then again, that's where I'll close my GU sales and probably look for some longs.
Okay, dope, dope, dope. Yeah, and I'm pretty sure you're gonna go ahead and show us that on the charts as well, because I'm pretty sure everybody was like, "Yo, is he showing charts?" But yo,
Oh
either
yeah,
way,
yeah. I mean, I could show them, bro. I ain't want to snatch it from you right away. But
yeah, nah.
if
I
you
mean,
want me to,
yeah, nah. I mean, we could get to that for sure. Let me just finish up with this fundamentals, and then we can go ahead and pass it right to you, and you can do that for sure, right? So, I mean, overall, guys, like I said, it's gonna be a very interesting week. I know for sure a lot of these central banks are definitely going to raise rates, so just keep that in mind. Central banks are definitely still hawkish, but just with these little patterns, with a couple of these central banks already starting to lower by how much they're raising rates, again, we have to start to now think about the shift in sentiment, right? Because it could be very possible where it actually does happen, even if it's short term. But either way, we want to be positioned and be aware of this stuff so that we could go ahead and take advantage of it for sure, right? But that's pretty much our news for the week. I'm not sure if Skaggs wanted to go ahead and contribute his thoughts on the data for the week. But if he's there, he's definitely more
I
than
mean, you
be able to do
guys
it.
pretty much covered it. The only thing I would recommend, and again, this for me is a little bit different because again, I'm kind of coming off some hot weeks here. But with this much data, guys, again, sometimes it's best to reduce your activity in the markets. So I said this last week, and I kind of remain the same this week. I'm looking just to exit most of my swings. I'm looking to continue to, not enter, but exit. So we'll see what some of these central banks have to do. I'm pretty sure the Fed does. So the Fed's in an interesting spot because what are we projected to go to? 4%. Um, their target rate more or less is about 4.5%. So it's like even if they give us a 75 basis points, that kind of solidifies for me and the rest of the market that if their target is 4.5 and we're sitting at 4, then the one after this is probably going to be a 50 basis point hike. So just kind of going off their own data, again, their target is 4.5%. Some people are speculating that they have to go as high as 5. But again, if you're looking at the numbers, there's really not that much more room for like 75 basis point hikes. We're kind of like at the point, where it does make sense for us to get less aggressive. So just understand mathematically, the room we have left to get more aggressive doesn't really exist anymore. So it's not even that they want to, it's just that like this is their target. They're gonna see what happens now that their target has been achieved. And it's either gonna be working or they need to, maybe adjust their future targets. And we'll get all that information in December. So yeah, just something to consider. Even if you do get a 75 basis point hike, which I do believe is on the table still, I believe the market will react in a way that it knows it's no longer looking forward to that same result. So again, the market plays off rumors, not news, right? So it's less about what this number comes out as and what the probability that that number changes next time. So yeah, that would just be that would be my opinion. I still remain long indices. I still remain bearish dollar. Again, because that's the idea that I'm playing. I'm playing the idea that even if we get 75 this time, the chance that they have to go down to 50 for the next decision is going to just increase. So, yeah, that's all I'm looking at. I don't really care what the RBA does. I don't really care what the Bank of England does. I don't really care what Europe's CPI comes out as. It's going to be high. We know it's going to be high. The ECB, we expect to get more aggressive because they were late to the party. But yeah, in terms of the Fed, they're a leading central bank. And the Bank of Canada has already kind of switched to 50 basis points. So, again, increasing probabilities that maybe the Fed does, slow down in the near future here. I think the result of them doing that will lead to inflation ticking up again, by the way. So they will have to get more aggressive in the future, but there will be a small period of opportunity here where the average person is left confused, so to speak. So yeah, hopefully that clears that up in my expectations. But I'm really not gonna be doing too much this week, family. Like we'll be live trading. I'll give you guys the opportunities, but I'm really in watching what they're doing mode. As we wrap up the year here. I mean, you guys know as we move into December, if you guys have 2, 3, 4 years experience, you guys know the markets get a little shaky here. The algorithms really take control because people kind of start going away, start going on vacations, holidays, etc., etc. So the holiday rallies should come true. But yeah, bro, that's my opinion on the Fed and what they're gonna do.
Yeah, for sure. So I mean, again, it's gonna be just a very interesting week, guys. If you've never traded news before, then it's definitely probably not the news, not the week at least to try to trade news. And if you are, just go on your demo account and just see what you can do out of that. But besides that, Ray, if you want, bro, you're more than welcome to go ahead and take the floor, bro, and do your thing. Go ahead and break down these markets and give us an insight as to what you expect.
Definitely appreciate y'all. And first and foremost, appreciate everybody just for tapping in to the call this evening. Again, looking to have a phenomenal week in the markets. But just with that, me being a very technical guy, and maybe this is just my tinfoil hat mode and my theory or whatnot, them slowing it down and, slowing the effects of holidays. I feel like the heavy spending, right? Spending will increase in the markets regardless. And that may be a reason why they may not be as encouraged to try to lower inflation for the next couple months. That is just a theory of mine because we're kind of moving into a season where people are going to spend regardless. And, if we're looking at the people that are in control, and the people that's making money, especially these corporations and stuff, they want to make as much as possible. That could be a reason. I don't see, it slowing down dramatically long term. So like Skag said, I could see them actually reevaluating that target, after the holiday season and, things of that such. So over the course of the next couple months, obviously, we're going to be in kind of sit and watch mode. But I wouldn't be surprised to see a lot of these same things continue moving forward, into the future. But, me being somebody that, again, likes to trade what I see, I'm seeing this point of interest up here look very interesting, at least for a pullback, right? And I know I'm currently in a pullback within this price action here, right? But, once we actually get up here, I do think we can actually fall some more, potentially to this point of interest or even lower before returning back in our bullish stage. So just with that and me, seeing that as a potential possibility, that is the reason why I am currently short on GU, because I do see some bullishness coming into the DXY just for the next, day or so. See, so just with that, me seeing that we actually took some lows here. I don't think these are all of the lows that need to be taken, but I do feel like us taking this low to make this one is strong enough to give us this counter trend here. But I don't believe that it may be strong enough to make completely new highs. So with that said, I do feel like we need to grab a little bit more. We do have pocket of liquidity resting here. We do have a lot of inefficient price right here that could be a potential target before we go long for a swing position. I do look at this long position here as more intraday, short term, next day or so. And then, we can kind of go ahead and continue with the motion of this bearishness that we've been seeing because, we have, swept highs here. So, we could somewhat classify that as a strong high. Then we come here where we do take liquidity on this high within the range. So since we did sweep highs and then kind of came down and made some fresh lows, breaking beneath that point, now I'm looking at, this trading range right here, right? Considering that I'm looking at this trading range, this would just be a pocket of liquidity within this range here. And I'll try not to mess my charts up too much so you guys can keep seeing. Go ahead, clean that up for y'all. So since we did actually, take liquidity on that internal range liquidity and, came here, made new lows yet again, breaking here and here. Now I'm looking at this to be my high and my low of the current trading range. So since we did take out this low here, that is the reason why I see that retracement being very prominent. I want to I want to see us at least get above this point here. And as we get above this point, this is where, I'll be looking for, potential sell opportunities, at least on the DXY, and then, seeing some consolidation, seeing some type of distribution in order for the markets to go lower. So just with that, I am kind of short right now on GU, right? And, we could speculate about this point of interest here, but, one thing I do notice again is we do have that sweep of the high followed by some lower lows, right? And we do come up here, take out this high that we have resting there. And now we're in this big area of in price, all right? So me understanding that, I figured that the likelihood of us going short, at least temporarily, is slightly high, right? And then on top of that, I noticed that we are sweeping highs, but we're also making weak lows, right? So these lows weak, they have lots of wicks within them. This low pretty weak as well, lots of wicks within it. But then if I come down to the 5-minute chart, okay, if I do come down to the 5-minute chart, I do see consistent sweeps of liquidity happening, right? And I even go down to the 1-minute, just being honest, because it's all the same in my opinion. It's just different perspectives of the same chart. So, if somebody asks you what time frame you trade, you should essentially trade all of them, in my opinion. But understanding where we are, right? I don't have the imbalance on the 4-hour marked up, but just remember where we are, right? So this is an area of imbalance. I try not to mark up too much just to keep my charts clean, but we're within this area of imbalance. So it's not always about what happens, but more or less where it's actually happening. So it's not about what happens as much as where it's actually happening. So the fact that we are in this area of imbalance on the higher time frame, that's when I look at the top-down analysis. I know I'm in a potential sell zone, so now I'm looking for sell footprints, right? Or you can call them signatures, hints, footprints, whatever you want. I call them footprints because they leave signs of where something is going, right? So us understanding that, we have a high here, then we take that high. So now I can look at this as taking liquidity, right? Now we start to transition lower and we see the same thing actually beginning to happen, right? So I come here and now I also have my hezi off of demand, which takes liquidity before pushing lower again. Internal range liquidity here, which we actually tap into. Then we make a new low, right? Come back up, we respect this high. So since we respect this high and then make yet again another low, now this is my current trading range, all right? So now I have the top of my range TR, bottom of my range BR, and now I'm taking out the liquidity that rests within that range here. Right? So all of the money that's resting within this range, we took it out here, and then we started the transition lower yet again. So obviously this is a lot of missing price action, but you just got to use your imagination. Just because we can't trade on the weekends doesn't mean the market isn't, doing anything. So structure that is, so we're breaking lows here, 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 and there, right? So since we're taking out all of these lower level or lower time frame lows, and then we correct back into one of the highs that broke those lows, that's why I'm looking for the continuation. So I took a sell from 161. I'm currently up pretty nice, and now I'm just going for my targets, okay, which would be the bottom of the range here. Also see this low being pretty weak. I don't look at this as a low that's gonna send the market dramatically higher. I do feel like we can come fill some of this in, maybe even more. And 1 to 8 is more than enough. I don't need, a 1 to 20 on a counter trend trade. Once the market actually fills in, this inefficient price, I'll be curious to see what happens here. This isn't my this isn't necessarily my textbook setup or anything, to buy from here, but I would be interested to see if we do drop, start to, consolidate a bit and the potential to turn around. But this is just an area of profit taking for me. Being pretty beneficial for me. So, it could just tank from here. It could play around until more volume comes into the market during session. But ultimately, I'm just looking for this high to respect and for this low to break. Regardless of if it happens from this high or if it, tries to take me out at break even or not, it doesn't really change anything. Switch my analysis up a little bit, sit on my hands. But for the time being, this is exactly what I see. This is why I took it. Even the weak highs within the retracement here were something that I definitely want to see get taken out. So once I saw that, and once I saw it happen with a decent amount of volume, and that's the other thing you also want to take into consideration, y'all. If you want to trade with the market makers, essentially, a lot of people will see this candle here and they say, you know what, I ain't selling that. Like, why would I sell if the candle is, you got this big bullish engulfing candle? But what you got to realize is that's not, yes, you can classify it as a bullish engulfing, but more importantly, it means that somebody else is taking action right here. When you have these tiny candles like this, this is the areas where the market isn't, like, the big players in the market aren't really active, and this is why you have tiny wicks, little dojis, not really a lot of movement. But when you have that movement, that means that somebody that can move the market is participating. So that's when you actually want to participate. And that's when, in my opinion, you should be looking to sell. Because if you wait for a reaction, or if you even wait for this candle to be completely engulfed, you've missed out on a lot of potential money. And now, instead of a 20 pip stop loss, you're going to have a 30 pip stop loss. So, just take that into consideration. When you see these big spikes and stuff like that happening in the market, don't let that scare you. Just trade the pattern, essentially, and you'll be all right. So that's what I see, guys. Like I said, short on GU, take this low out or take these lows out, and then I'll be interested to see what happens after that.
Yo, I'm gonna be honest, Ray. Those are some clean, crisp charts, man. If y'all agree with some of those setups he was going over, drop a 222 in the chat, because I was actually just like going in the chat, just like, damn, bro, like those are some clean charts, man. I remember when we really started learning the swing theories and these breaker bounce points, and I'm gonna just be honest, like the DXY. I pretty much have the same exact thing as you, bro. Just being honest. I will share my screen and actually just break that down. So if you guys could hear me loud and clear, drop a 111 in the chat, because I don't know if y'all could have heard me earlier or if I was bugging or something. But let me know if y'all can hear me. But bet. So we're Gucci. Everybody's dropping ones. So go ahead and share my screen. I'm not gonna be on here for too long, guys, because like I said, Ray kind of just blew my mind and blew a lot of y'all mind here on this call. So we're not gonna take too long on here. If you guys could see, I don't know if it's going or not. Here we go. So if you guys can see, I pretty much have the similar standpoint as Ray. One thing I do just want to point out is one thing that I'm just looking to be achieved very swiftly, very smoothly before we start going to the upside for the DXY, because I don't want you guys to like get it twisted. The dollar is still very bullish from a long-term standpoint, but I'm just looking to see this level be achieved. The correct number should be 108. So really just a 108 level. If you're looking at the DXY, we did say that we wanted retraces to happen, and Ray is looking at this level right here, and that is just, if that comes up there, like full margin, not really full margin, but full margin, damn near. But pretty much it can't bounce from this level, so that's why I have this marked up. But if it were to come up to the 113 101 level, then yeah, that would be crisp. But it could also bounce from here too, so I'm keeping both scenarios in mind. Just wanted to see 108 be achieved probably by end of this week, maybe next week, if the market does what we really want. So yeah, how that would play out on EU on Friday, I actually called out this sell. It's crazy. A lot of us cashed out on it. It went from 9981 to 9937. I actually closed out around here, but the market could pretty much just continue from here. So for the intraday trades, the market could pretty much just continue because the entry was given on Friday. So it can just continue with that Friday entry, or we could probably get an entry tomorrow. But overall, EU is probably not going to drop for too long. I'm looking for it to come down maybe to like 9879, like right here. And I would probably attempt to buy around here. I would attempt something around here, but definitely low risk because there is news, a lot of news this week. And, if it doesn't play off of that level, then I would probably look a little lower. But, we're just waiting for the next high to be achieved. Now, we want to always buy in discount, right? So, let's say we were to draw a fib like this. Anything below discount is an entry. And I want you guys to understand that. We do want it to ultimately hit 886, right? For all you guys that trade fibs, the 886 is something that's like really powerful in fibs. I don't really look at the 618 or any other things in fibs, but one thing I'll tell you guys is the 886 is a fib that I actually will use because it's pretty much the last fib that it can reach for the market to bounce off of before the trade is invalidated. So those are some more higher probabilities trade setups. So, obviously we would prefer it to tap the 886, but why I don't use it as a confirmation in my trading is because it doesn't have to go there. So, obviously we would love for it to come down here. And if it does, we would have an amazing risk to reward setup to take us to those new highs. But other than that, anything below 50% is considered discount. So this is a level I would play with a half risk. And then, yeah, if it doesn't hit, then we won't be too mad. We'll just catch it down lower, and then that would be our trade. But that's pretty much it. I'll definitely go over USD CAD. I am looking for some bullishness short term for us to come up to. I'll keep this one here. And by the way, guys, I'm gonna be dropping all of these markups into the Profit Society beta in the chat room. So you guys be aware, all these will be going directly to the platform. So I'm just looking for some intraday bullishness to take us up to maybe this candle right here, maybe this, for us to continue to swing down. And I'm gonna go ahead and drop this in the community real quick. Hold up, guys. Just want to make sure I log in correctly. All right, be back. So I want you guys to get in the habit of doing this, right? Drop all your markups in the community. Let us see what you guys have in store for us this week. And also you guys can get feedback from us, from other traders. And you guys can really document all of your trades. And, you know, guess what? If you have something that's good, you know, guess what? Maybe we'll have some people in the chat eating off of it. If you have something that's, you know, maybe you thought was good, but then later on it hit your stop loss or something, it could all be just learning lessons for everybody. So, you know, let's all get in the habit of doing that, because, you know, at the end of the day, that's how we all learn. We all had a community of people around us that we could learn from at all levels of learning. And that's what we're looking to do for you guys. So I just posted the USD CAD in there, Euro USD. I do have to clean up this chart because I kind of just did like a little bit more of a breakdown for you guys. So I will post EU as well. But yeah, that's pretty much all I have for you guys. EU and UCAD. You know, GU is beautifully broken down by Ray and the dollar. So, you know, I can second a lot of his markups. So, you know, in UCAD and EU, that was pretty much what I was looking at. And for this week, definitely will be on the New York session. So guys, catch me on New York. You know, make sure you guys are in the Profit Society. If you guys are on the stream and you guys are not, you know, in the platform, you guys don't have an account or something, because some people were asking me like, yo, where do you get your trades? Or, you know, where do you get, you know, where can you guys have access to our trades and our chat and, you know, all of this stuff? Like a lot of you guys be asking, but you just gotta make an account and stay active on it. You know, the app is coming out soon. So just stay woke, guys. You know, we will have an app on the App Store. So it's launching real soon. So if somebody can, I'm gonna drop the link actually to register in the YouTube chat. So in the YouTube chat, Kyle Hustle's on here. Just go ahead and register, make your account and stuff. We are launching very soon the main platform. This is just a beta, so we need your guys' feedback. We need your guys' output. And with that being said, I'm pretty much done. Hope you guys have a safe week in the markets. Let's get it.
Let's get it, family. Let's get it. Let's get it. Again, let's go ahead and see what else we got here in the markets. I don't have too much to go over, and I do want to go ahead and also give Skaggs his time as well, so he can go ahead and pretty much just go over what he wants to go over. But for me, the guys pretty much did nail it on the button, guys. There's only a few setups that I'm gonna be focused on going into this week. One of them is gonna be gold. I think gold has a good chance, at least for us to go ahead and look for some shorting opportunity from these levels up here around 1659. So that's one of those plays, guys, that I'm very interested going into this week, to see if we can go ahead and get that play. And the other thing is GJ. GJ is very interesting as well. I think we're gonna be, you know, still very bullish, you know, pound yen. So if we're able to see a pullback in this market, then I will definitely be looking for an opportunity, guys, to go ahead and continue going bullish. You know, so I still just want to continue riding these buys and seeing what happens from there. You know, realistically, my favorite play will be seeing price come all the way back down to these levels, around this 170 level, and going ahead and clearing these lows, and then going ahead and rebounding. Something like this is what I really want to see. Come down here to these levels, break this low, bounce back up, and then go ahead and send us back bullish, right? So that's the ideal setup that I would like to play, what I would like to look for. But we ultimately just going to play what the market does end up giving us at the end of the day. But those are the setups, guys, that I'm going to be focused on going into this week. Again, just keep in mind it is a heavy news week. So probably not going to be as aggressively trying to jump into the markets. But, we're just going to take the ones that make the most sense overall. But without further ado, I want to go ahead and pass it off to the boy Skags to let him go ahead and break down, what he has to break down as well. All right, so Skags, my brother, I appreciate you. Go ahead and take over.
Absolutely, bro. Actually, make me co-host because I cannot share my screen. But what's going on, family? Listen, I'll give you guys an update on the stuff that I've been in, that we've been rocking with. Here, let me see. Swap that. And I really just wanted to kind of start with oil. Oil is really the only thing that I'm going to continue to monitor pretty heavy this week. As you guys may know, we are bullish on oil. We have been for some time expecting price to come up to these mid 90, lower 100 levels. And I have been holding this for what's been about a week now, maybe even a week and a half on some of these positions. Yeah, almost 2 weeks here. And then we bought this, about another week and a half. So I am looking for continuations on this. We did break above these highs last week, which was nice. Got a little bit of a change of character. Happened on some higher buying volume, which you guys know, or may not even know, is something that I use as one of my confirmations. It's right. The fact that we cleared above this level here and did so on rising bullish volume is why we remain to look to the buy side. As far as areas that I'm looking at executing off this week, really not interested in playing up in this range. I was kind of hoping this would kind of liquidate the head and shoulders traders, but it seems like we're kind of getting like a double right shoulder. So we're probably going to end up falling a little bit lower. I will look at this continuation block getting taken out, us filling this inefficiency down here. So really that's my only play. My play on oil, assuming I get what I want down here, which is a break below this area and a reaction back up. But once we get that, I will look to go long, which is something like this. Stop loss below here. I'm probably not going to risk to the full wick. If this fills out, some of these other positions are at risk of getting hit, so I kind of just don't want to be in the market anymore at that point. So I'll probably risk below this wick. Probably do something like this. And again, looking at those higher time frame TPs as well. OPEC does have a meeting this week. I don't expect them to do anything drastic. I don't expect them to really reduce or increase supply, but America is draining its reserves thanks to our great president here, and we have to buy it from them. So I wouldn't be surprised again if oil does continue its bullish momentum after that OPEC meeting. But I'm not going to be paying attention to anything else. If we don't come down to this 85.59 level on TradingView, your broker might be a little bit of a different price. If we don't come down this area, I'm just going to continue riding out my longs that I already have, and I probably won't end up executing. EU, you guys know I continue to swing trade this from the 96.40 areas. Much like Kyle and Ray said, I do see reason for us to kind of continue down. We were looking at shorts up in this area. Didn't really give us any sort of executable parameters, so I'm not holding any hedges. But I do expect this to kind of continue to the downside. Probably play with this liquidity gap, and then maybe we can at that point continue bullish. But again, this is all going to be in the backbone of what happens with these central banks, right? Because there's a lot of data that's coming out on both sides. Again, that's why I'm not interested in playing around here, right? This is not peak liquidity. This is not a deep enough area that I want to buy in. It's not a clean enough setup to the sell side for me to sell into. So as a swing trader, I know this is just not, it's not my territory. And that's also going to carry over into the NASDAQ. NAS had a really great end of Friday. I actually added on to my NASDAQ buys on these earnings candles, and this was a little reckless because if this is actually like basically right at market close. Some brokers are different. Like some brokers will close NASDAQ at 4 p.m., but they'll open it again at 4:15 to 4:30, typically for the earnings plays. So it was definitely like 4:25. It was like some weird time. It was like right after the earnings that we got for I believe it was Facebook, like Facebook's earnings and all that came out, and again, very underwhelming. But what I was really playing is I was really just playing the idea of the wick fill here. I was just, playing the idea that once I bought, which is like more or less on the higher side of this wick, right? It spiked down, took out this wick, and once it started moving up, I was like, you know what? It's end of day. I could see a little bit of relief rally coming in, so I ended up just buying it. The end of the day, expecting it to, it's either going to do one of two things. It was either going to come back and fill this wick and take me out because my stop losses were like right below here, or it was going to do what it ended up doing, which was just, recovering and absorbing that sell side effort. I could go into like great detail about the volume here, but we'll probably do that in the live trading sessions this week. Again, week ended very strong, so I continue to hold. But now this is my third scale in because my second scale in is over here. So I'm just continuing to buy this, guys. Again, off the bias of holiday rallies, the Fed potentially pivoting, even if it's a short-term pivot, it might only be one or two decisions, but nonetheless, a pivot will be seen as positive. Another thing too is like you have all of this effort, all of this like this massive sell-off from tech earnings, right? This is all earnings driven, meaning none of these companies are doing good. Apple was the only one that came out positive, and it's very rare that Apple misses earnings in general. So no surprise there, right? But if all of tech was missing earnings, and this is as far as the sellers were able to take it, which was just liquidating punishing all these like late buyers, which we also were buyers in here, but I've since then exited those positions at the highs. If all this was doing was kind of just liquidating those people, and like this is like the extent of the bad news, this should very, very, very easily continue to the upside, right? Because it's like this is fundamentally driven. This is actual bad result like news coming into the market, and the market just ate it up. So again, sometimes you have to take that into consideration. So again, I do hold new positions from here, but where we currently are, it's either we continue straight up early week, or this thing is going to correct and take out this new position, right? There's no in between here, right? The more that this pulls back, the more easy it's going to come out and take out this wick. This is a go or die trade right here, right? This momentum is not going to, again, I would hope it wouldn't sit here. The longer it sits here, makes very corrective stuff, the easier it's going to be just to do that at some point. So yeah, that's what I'm looking at on NASDAQ. Again, I would trade to the bull side, trade to the buy side. But be careful of that news too. Again, if you are grabbing entries up here, we could have a week like this where we very easily kind of play up into these areas, up into the supply, and then just, with the news at the end of the week, we just kind of get smacked back down. It's also NFP week. I believe, right? Abel, am I wrong? We missed that on the calendar? I'm pretty sure it's NFP week as well.
It definitely is.
Yeah, I mean, I know it is, but I didn't remember if he went over it earlier. Yeah, let me see what they're forecasting here. Yeah, they're forecasting a decrease. So okay, yeah, so yeah, we get it's an annoying week, honestly. What else do we have? Gold. Yeah, gold's kind of annoying. Yeah, my positions down here are 1621 are probably at risk of being taken out, to be honest with you guys. Yeah, so I mean, we tried to buy the lone candle here. We rode this up. Again, a lot of you guys took profit on this rise up. If you ended up breaking even on the remaining of your position, that's cool. It is what it is. But the more we test this area, you can't continue testing these continuation blocks, these lone candles. The more you test them, the weaker they become. So Now that we're kind of building up more liquidity, again, if we can get a dip below and a recovery, we can maybe continue to trade this bullish. But to be quite honest with you, the way I see this is like the second gold gets back above 1650, she's going to get smacked right back down. So we're probably going to do something like this. Grab this, come up into 1650, and then end up spilling over. And then with the news at the end of the week, maybe you do stay above this level. But I'd be willing to bet that a lot of the people like myself that were buying in here actually do end up getting taken out this week, and we'll have to re-enter the market an additional time. So yeah, that's kind of annoying. So we'll have to see what happens on gold. But if you do want to go short on gold, I would definitely pay attention to the 1652 area. That would be where you want to start looking for some price action that supports that. But yeah, that's really all I have, family. Oil is probably your best bet for executable trade this week. And remember, you only need one good trade. And oil could definitely be that trade for us this week. So yeah, pay attention to this area down here, 85.60. And we'll see if we can survive the news on this. I do want to just check chat real quick because I have not kept up with chat. Let's see. Maybe we'll look at the JPY index. I mean, yeah, you could look at more stand pairs. They've erased all of that news. Let me see. Somebody said Bitcoin. Yeah, Bitcoin's gonna have an interesting week too. Let's see. I'll do one more pair recommendation if you guys got a pair recommendation. Let me get chat back active. Drop some pair recommendations. I'll do one more that I normally don't look at. Because all of this stuff I've had ideas on. This is nothing new. So we got Bitcoin AJ, Bitcoin USD CAD. I mean, Kyle just went over USD CAD, so you can go back and watch that. AUD CAD US 30. That's gonna be the same thing as Nasdaq. AU, same thing as GU and EU. Bitcoin. People want Bitcoin again. So you guys really want AY? Why AJ? You guys got to understand these yen pairs you're better off just staying to the buy side, to be quite honest with you, unless you're like me and you like to speculate on when the Bank of Japan is going to intervene, which honestly last time wasn't really speculation as much as it was they literally told us when they were going to intervene, and we just took advantage of that. But yeah, I mean, you guys know the RBA is increasing interest rates. You guys know the yen is negative, so I mean, honestly, why you guys wouldn't just look to trade this to the buy side, I'm not entirely sure. This is super choppy too. This is like really, what are you guys trading inside of here? Like, look how choppy this is. This is nasty, man. This is nasty. I look at this chart, and honestly, all it makes me want to do is go to a different chart. And if that's your first feeling when you look at something, then you should not force ideas. But that chart is ugly as all hell, so we're not gonna look at it, right? And that's really how I trade, guys. If I look at something and I don't like it, that's it. It's done. It's easy. I'm looking for clear setups that are obvious, right? But nasty. I'm not looking at that. Bitcoin, I feel the same way about, though. This is a really just ugly chart as well. This is just a really ugly chart as well. Look, everybody got excited last week. All right, everybody got excited. Oh, look at this. We broke the resistance. But the question is like, how sustainable is this move? Right, past the resistance. All right, how sustainable is this? All right, let's look at the volume associated with that.
Quick disclaimer.
Nothing crazy. Nothing crazy. Match the volume here. It's not as much as the volume here. Volume here. I mean, it's pretty low. It's pretty low. It's not really appealing. I will say, I have a little bit of a bias because, again, I do expect some dollar fade off. That being said, I see the same thing on this that I see on like oil, is I would see an opportunity in which, again, look, you came and filled that same candle like you did on gold. You ended up going nowhere. So what's going to happen is you're going to build up more liquidity here. And at some point, you're going to want to go and capture that. So for me, honestly, this is like, this and oil may as well be the same trade. Yeah, this and oil may as well be the same trade. So immediately, my expectation is that whatever support ends up forming here in the longer term is probably going to break. Do we get another retest to the high? Maybe. I'm not really concerned with that, though. I'm really concerned if, can I get premium pricing back below here? So the question is, like, once we do break below here, right, however you want to draw your line there, and we play into all this inefficiency, like, how deep do we play? And what's the likelihood that we come back and we take out this stupid range? Right, because reaccumulations usually get wiped all the time. So for me, the most obvious, like, Sunday theory, again, that's all this is, like, we're not live trading, we're just talking about like where price could move. For me, it's like I'm looking below this candle into like this order block and this wick. Right, I would expect the combination of like all three patterns, like the order block, the sell side absorption, the continuation block, and the wipe of this liquidity, all of this kind of confluence probably tells me that the price will navigate its way back down here. Right, will navigate its way back down here. Now it's important that we hold this wick, preferably, because what that does for us too is that keeps like bullish order flow while still punishing 90% of the buyers here. So if you're looking at Bitcoin, I would love, and like there's some reason to play semantics too. Like, does it hold between this structure? Like, yeah, maybe. Like that absolutely could be the case. So don't. It's not specific. But look, I mean, like, yeah, right. This like 1950 area. Give me like 1950, and I'm a buyer. And I'm a buyer as long as this wick holds. Run a little bit past the wick because of volatility impacts on her. And then I probably look at her to play up into some of the structure again. So that's what I would look at. Now for me, I would need this level and all of this to happen on the backbone of the Fed news. Like the Fed news would have to be the thing that captures all this liquidity. So we'd have the range all week, do some stuff like this. Whatever your journey to here is, right? But I would want it to mess around most of the week into Wednesday. And then Wednesday being like the reason why this moves down into here. And then we move away because, again, the rumor of the future hike being a 50 basis point. So yeah, that would be my expectation this week. I wouldn't be a buyer up in this range. There is possibilities that, maybe it doesn't move near to that inefficiency and you get something like this. If that's the case, then, once you get this break of structure and you're up in this area, then you can pivot at that point. But my assumption would not lean towards that. I would lean towards this 1950. And it's probably the same thing on Ethereum, if I had to bet. This actually looks a little bit different. This actually never ended up testing here. This looks a little bit stronger. I did tell you guys, though, when we smacked that 1150, I did say we were coming back up there. That's why the arrow's here. We've been looking forward to come up to this 1650. So we kind of achieved that. So again, the pullback now is logical. I didn't even trade this. I could have traded this, especially on the break of this with the close back above. We could have took, yeah. Oh well, can't catch everything. About 2,500 pips. So I mean, not gonna cry about it. All right, let me see what we have in the chat. ISO rant. Who knows what ISO is? All right, let me get a 1 in the chat if you know what ISO is. Let me get a 2 in the chat if you don't. Let me see. 1's in the chat if you guys know what ISO is. 2 in the chat if you don't. Oh man, some of you are new. A lot of you are new. It's okay. It's okay. Should we go on an ISO rant? Abel, what you think, bro? You think we give them a little taste of what the crypto webinar will be like?
I mean, I'm never shying away from providing value.
Yeah, that's a fact. Neither do I. I don't know if they want it though. They're gonna have to tell me they want it. Let me pull up some resources maybe here. Give me a second as you guys pull up some resources for you guys. We'll go with the big name 3. We won't go too deep with this. We won't go too deep. But nonetheless, we will go over this. All right. Oh, whoops. Hold on. Let me close these tabs on the website. You guys can't know what's coming. It's almost leaked some of the new pages of the website. Not a good idea. All right. So let's start on their website. All right. So let me introduce you guys to ISO 20022. First off, let me introduce you to just how do I just get back to the ISO website? Can we just go back to ISO? Okay, maybe not. All right. Well, for those of you that don't know what ISO is, they basically set international standards, right? It's the International Standard Organization. They set worldwide standards across multiple things. Some of those things being finance, some of those things being agriculture, some of those things being energy. They just set worldwide standards. You know, and we all know how America is very good at following worldwide standards, you know. But nonetheless, right, what they do is they set standards. And ISO 20022 is a very specific standard that goes live. Technically speaking, it goes live January 2023. That is its deadline, right? It's actually the rollover of the new year. However, obviously, what we're dealing with here is a universal financial industry message scheme, which sounds really fancy. It's just the backbone of the backbone of financial messaging or financial transacting. So with that being said, the institutional deadline for adopting ISO 20022 is the end of November. So a full month before it goes live, right? So it goes live in January. They want it done, you know, ready to go by the end of November. So you're going to see a lot of financial institutions basically, you know, prepping this month, right? Heading into November, we're 2 days away, right? You're going to see a lot of preparation for this. This is going to set a global standard, right? A universal financial industry message scheme. So if we just come down here, we can, and again, you guys can go to the website, iso20022.org. And you can read all about it. But when we come in here and we go to read more, let's just look at some of the points that this thing describes, right? So this describes a common platform for the development of messages using. Let's go to like the less technical. No, that's going to be, that's way too deep. They used to just have, hold on, let me see here. They literally just used to have like some touch points. I'm not going to go to the dummy thing. Let me see here. Yeah, they changed all this stuff around. All right, so let's go to Swift's website because Swift defines it a little bit better. Who knows what Swift is? All right, type I do in the chat if you know what Swift is. Right, all you need to know from this website is that it's an actual international standard, right? That's all you need to know. But let me know if you guys know what Swift is. Some of you may know this because of Russia, right? Let me know, right? So you guys know what Swift is, right? Swift is the backbone of the financial industry right now, right? That's what all the financial platforms that you know basically run on. Interbank transfers, things like Zelle, Cash App, all that stuff is built on top of or utilizing the Swift network, right? So these are the people that are already responsible for the way that money moves, right? They deal in cross-border payments, they deal in everything, right? You can come to Swift's website, you can learn all about them, but it is the way that the world moves value, right? They do this every single day. They do 8.4 billion financial messages, 100% availability. They're in 200 plus countries and territories, aka the world. 99.99% availability, over 11,000 plus institutions connected to Swift. All right, so we know that these people are already deeply integrated into providing financial services. Right, this is what Russia got kicked off of when we basically, sanctioned them, and when the whole war started, right, we kicked them off of this network. Now they sit on a different network. They're actually on the backbone of China now. But we can see that Swift is already deeply integrated. So this is not rumor. This is not speculation. This is not conspiracy theory. This is just fact. All right. So you can see right on Swift's website, right? What is ISO 20022? And they are looking to adopt it. They are moving. Look, starting in March 2023, the way Swift Community Exchange's payments message will be transformed with. So look, they're actually looking for March 2023. But again, they'll be ready before this. So let's look at some of the benefits to this, right? So they say this is going to be richer, better structured, and more granular data. Quality data means quality payments, more transparency, more remittance, which in turn is better customer service, improved analytics, less manual intervention. Further operational benefits include improved analytics, less manual intervention, more accurate compliance processes, high resilience, and improved fraud prevention measures. Supporting end-to-end automation, a single standard that covers all business domains, end-to-end business processes, all that fun stuff, using modern technology, mainstream XML technology, which is well supported and facilitates instant integration, worldwide adoption. Against they're going to drive their 200 infrastructure-driven derivatives and initiatives. Implementing iOS 2022 or considering stopping the standard for payments, right? So what does this mean, right? We go over here to JP Morgan. Again, we see JP Morgan, same thing, moving towards this. All right, I want you guys to kind of read through some of this stuff here. And what do a lot of these headlines remind you of, right? Worldwide adoption, modern technology, end-to-end automation, quality data, improved analytics, less manual intervention. Right? What does this remind you of? It should remind you of something. Somebody said just buy Bitcoin. You should always have Bitcoin. Bitcoin should be 50% of your portfolio minimum. No exceptions. No exceptions. What's it remind you of? One world currency, unemployment. Why does it remind you of unemployment? That's not a good thing. It should remind you of blockchain. These are benefits that blockchain provides, guys. Modern technology, worldwide adoptions, right? Decentralized nets, or even centralized networks, right? Things like XRP, even though they will argue that eventually it won't be centralized, which is bullshit. End-to-end automation, quality data. Blockchain data is very, very much quality, right? Full transparency in blockchain data. Improved analytics, less manual intervention, right? No need for third-party, verification. You don't need to go through verifying JP Morgan's ledger with Bank of America's ledger, right? They don't need that manual intervention in order to approve stuff. So with this going live, there are certain coins which will be used to build the infrastructure of ISO 20022. And you guys can probably guess, right? What would you, if you guys were gonna guess what coins are being incorporated into this international standard, right? What coins are going to be used for delivering a system like this to the world. All right, and I know you guys are all going to know the obvious one. So yeah, we'll just say it. XRP is obviously top choice here. XLM probably top second choice, right? But I want to know if you guys know the ones outside of XRP, XLM, because to be quite honest with you, some of the other ones are actually a little bit more important than XRP. I see the XRP 1111 dude in the chat. I'm sure this guy's ecstatic. He's been waiting for this moment his entire life. XRP, XDC, yeah, shout out XDC, XLM, correct. IOTA, IOTA plays a little bit of a different role than XRP, XDC, and XLM. Algorand, very, very big on Algorand. Dogecoin is not a part of ISO 20022. And please, I hope it never, ever, ever, ever gets approved on that list. Algorand is a part of it. All right, shout out to my Algorand people. All right, shout out to my Algorand people. They used to have something on their websites that also linked back to this. They no longer do though. It might be in this. Yeah, see, so like, I mean, look, learn how to put 2 and 2 together, right? This is the PDF, The Future of Payments with Algorand, Citi, PayPal, GrabPay, MasterCard, Swift. You see the connection? You see how you can connect the dots right away? Digital Monetary Institute. All right, so you guys can see right away how they have their connections into this. RSR, Basic Attention Token, no. Solana, no. No. The other ones, guys, are going to be Quants, which if you haven't known, Quant has been on a tear the last 3 months or so. Quant, HBAR is another one. I'm gonna have to go to my list in my phone. What was it else? XDC. And so forth. XDC, there's a lot of opportunity in this, but it's fairly new. So who knows if it's going to take off. But what you guys need to understand is when this goes live, it's going to give institutions the green lights to build financial services on top of these ISO, what are basically ISO approved tokens, right? So what you guys need to understand is this stuff is going live within 5 months. Within 5 months, anything that's considered ISO compliance will have the green lights in over 200 plus countries and territories. 11,000 plus institutions will be green lighted, right? And on a worldwide scale to use these technologies. Now, don't mistake that. Please don't mistake that for these 11,000 institutions needing to buy said tokens, because you can build on top of something without actually having to utilize or change the dynamics of the supply of the token. Now, obviously, if somebody is building on top of something, they're obviously going to create some sort of use case for said token, but that doesn't mean that they're going to like buy it, hoard it, constrain supply so much to the point that it goes, berserk. All right, I don't want you guys thinking there are some people that believe XRP is going to do ridiculous things, like go to $500. And I'll tell you why that's wrong. Is that defeats the entire purpose and the whole tokenomics, including market cap and fully diluted market cap, what you would even, on how much money you would even need to be dealing with to even do that. But 2, these coins specialize in cross-border payments, right? Which means this really just acts as a bridge, right? It acts as a bridge. So even if a company is using millions or billions of XRP to do cross-border payments, it's typically settled in a way that's not impacting like floating supply, so to speak, right? So just be careful, guys. You want to just go with the ones that have the most stuff being built on top of them, but don't buy them with wild expectations of, this is going to be $500, $100, whatever. Some of them just don't. They have way too much supply to be having stuff like that. But you guys should absolutely expect these blockchains that are approved for ISO to begin to skyrocket in terms of usage, right? Actual network activity will be very, very, very high. QNT is good. Yeah, QNT is amazing. QNT actually is necessary for a lot of these. What QNT actually does is QNT actually like secures secures and makes a lot of these what you call what do they have right here, interoperability, so allowing them to work together, right? So XRP and XLM being hand in hand, running side by side, right? Algorand running side by side, right? You're going to see this word everywhere because it's crucial that these systems don't only work in their own native ways, but that they work together, right? You can't have one of these countries built on top of Algorand and one country built on top of XRP, and that means they can't do business. That's not going to work. That's like saying somebody has Visa and somebody has MasterCard, so you guys can't do business. That just makes absolutely no sense. So if you're going to be bullish one of them, you should be bullish all of them. That's a little bit introduction. You guys got to do a lot of research on it. Again, we've been talking about this for 2 years, so at this point, I'm less interested in talking about it and more interested in seeing how these institutions actually go about delivering on top of these. So it'll be exciting to see. But that's just a little bit of an ISO rant. I don't want to go too deep into it. We'll have to see what happens this month. I'll have a lot to talk about as these institutions begin to build and kind of look into that. Well, listen, that's all I have. I think that's all we have for tonight. Abel, Ray, I don't know if you guys want to contribute anything final real quick. We will see you guys on the platform, as always, for live trading sessions. So make sure you guys do log into the platform early, 8:15, 8 a.m. Eastern Standard Time. Make sure you guys hop over into the group, and you guys will be able to hop on those live trading sessions this week. We will be wrapping the beta up in about a week or two as we prepare for launch. So take advantage of all the free trading sessions that we do this week for sure. Gold showing nice reaction for longs, like right now. Like you want to buy gold right now on a Sunday. That's what you want to do. We got to take a signal. Is that? We're gonna take a YouTube comment signal. Is that what we got to do? Let's see. I mean, outside of the engulfing candle, what are we looking at here? Yeah, I mean, I wouldn't chase this. This is not happening in an area that I would want to see it happen in. I would bet this candle probably gets erased, to be honest with you. Eric said no. Eric's like, no, we're not we're not about to take it. Yeah, that's what I'm saying. See, we're at a session. I'm glad you guys are on the same page as me. But yeah, listen, family, that's all we got for you. We appreciate you guys as always. We'll see you guys in the live trading sessions. That being said, it's your boy Skag on behalf of Profit Society, and I am out unless Abel or Ray have anything they want to contribute.
No, we're all good. All right, family. Appreciate you guys. Love you guys. Hope you guys have a phenomenal rest of your guys' night. And yeah, make sure to jump on tomorrow morning for live trading, or actually on Tuesday, live trading. Let's get it, family. Have a good one.